Hello everyone, this is Teddy Keckstead from Forex Trading Unlocked, and we are here with a daily Forex market analysis and live trading webinar for you. And we're going to pull up our disclaimer real quick, just to remind you that this webinar is for illustrative and educational purposes only. So we have quite a little bit of ground to cover. We have the dollar that is being ravaged by the dollar bears right now. So it's been a tough week and a tough day, and right now it seems like the dollar bears are going to stay relentless. So let's see what's going on. So right now we have the forex-trading-unlocked.com website pulled up. Don't forget to subscribe to our YouTube channel so you can be notified when we're coming up with our free videos for you. Now the dollar index, as you can see, has hit quite substantial lows yesterday and is now flirting with new wave lows. Now after you've made a high and you've had a higher, if you've had a higher low and a higher high and you make a higher low, or lower low rather, that means what? That means a change in trend, at least taking us off that bullish forecast that the dollar had been in for months up until the past few months. We've had quite the sell-off the last 3 months, being very, very bearish for the dollar, and actually rather relentless the past few weeks especially. So the question is are we going to find support where we have found the dollar typically starts to run into issues as far as selling off, or is this the beginning of a really big wave down for the dollar? So let's take a look at what's going on in the Euro US dollar, number one component of the dollar index. And as you can see right now, the dollar index is the Euro US dollar is rallying strong versus the dollar. So the euro has been a bull. It broke out to the upside a few sessions ago and doesn't seem like it wants to get out of there. So let's go to the daily here and see what's going on. So here we have the market trading at $1.1590, right below its highs of the session. As you can see, this continuation rally has been going on all week, and the momentum here, it's not like it's a very fierce rally. The slope is rather steady except for the last 2 sessions. And the thing is, you have a trade deal and also a stimulus package that has been completed with the EU. The trade deal would be with China, and then the EU just passed the stimulus package, which obviously the world is looking very bullish and favorably for the Euro US dollar. So we don't have any signals right now. The trend is your friend. If you're long, ride it and keep raising your stops. Don't let a winner turn into a loser. And if you're trying to fade this thing, well, I would say wait for a sell signal, and I don't even know what kind of sell signal you're going to have right now because everything is overdone with it. It's grinding, and it's a momentum trade, so I would use really a lot of caution here, especially when you see like the British pound US dollar, which has continued. The second biggest component also had been rallying the past couple sessions, but today it's ran out of gas. It didn't make a higher move high, and it is slightly lower on the day. It had been lower most of the day. So does that mean that we're coming to that buffer zone? Well, not necessarily. It could be just we're in that buffer zone for the pound. If you look at the pound where it's trading right now, and we put a little line right here, you can see that we've been coming close to this $1.2823 level for months, but it seems that as we start to get toward it, we fall apart. We have been making higher move highs and higher move lows progressively. However, they are not very significant and steep. So maybe we make a challenge. Even if we do get another pop in the pound, not much follow through is expected here. But this is helping to keep the dollar index under pressure. Now we have this dollar Swiss. Now the Swiss, the yen, and the dollar are the 3 flight to quality currencies. Obviously, there's no flight to quality going on in the dollar right now. So the Swiss continues to pound new lows. It is a falling knife here. It definitely if you look at this on a weekly basis, it is very similar to the dollar index. And this one has been trending lower and is looking to test those March lows. As we're talking right now, it is offer, and you can see that this market, where it had been sideways for months, has trended quite significantly over the past 2 weeks. Just a few months rather, and the follow through is it's right there. So I would be very cautious with trying to catch this falling knife here. Now let's look at the US dollar JPY. The US dollar JPY has been a range trader's delight and a trend trader's nightmare, and I think the more of the same will continue. I would look to I think the buying into lows and selling into highs, basically holding the range from where you're at, that is probably the trade. It seems to be working. It's a tough one. It takes a specialty to be able to trade that, and you got to really pay attention to it and be disciplined to realize when the market is breaking out. And right now, this one, for whatever reason, is the one quiet currency cross that we just have to look at it as it is what it is. Now let's look at the Australian dollar, US dollar, which in this trade zone, along with Japanese yen, has continued to batter the dollar. This is another currency that is resilient and continues to pressure resistance. The trend is your friend. This market has been rallying since March and just continues to not give way. It is relentless, and it is all we can say is that this is your trend. Follow it. That is it. There is no reason to sell this market until it gives you a real reason. The New Zealand dollar, US dollar, also has made out higher move highs over the past couple of days, accelerating the dollar decline. More of the same is continuing here. This trend is a nice even sloping trend. Before there was the pandemic, this market was strong. Now it is pretty much regained its vigor to where it was at, and as the U.S. seems to be stymied, whirlpool, the rest of the world seems to be just okay. It seems like it's all, well, not that's over, but it seems to be okay. So unless we have some sort of a relapse going on with the coronavirus, I think that this trend is going to continue. Now, the one thing that's very interesting is the U.S. dollar, Turkish lira. This market has had no volatility, for at least compared to relatively speaking, compared to the past 6 months. For a month, and finally it had a breakout move to the downside yesterday, and now it came back. So this is telling me that in the lesser currency crosses that we are definitely starting to see some volume spiking, which is interesting. So are we coming to a bottoming part in the dollar? Not necessarily. I wouldn't try and catch a bottom right now because it has only been a failure to try and do so for the past few weeks. So right now, we'll see what happens with this market. But as far as the lesser currency crosses, we're seeing activity and volatility, but we're not seeing any directional strength or weakness for the dollar. But now with the US dollar peso, we are seeing that. We've made lower move lows and lower move highs consistently, and then now we're making lower move lows once again. So the trend here is bearish. I think that most likely you're going to see this continue. This has been range trading for a month and a half, so use caution. Doesn't mean that this market is going to totally sell off. Remember, the lesser currency crosses are more likely to be consolidating than trending very much. So we'll see how this pans out, but right now I'd be cautious being a bull here. US dollar Canada also has been having trouble the past few sessions and is coming back to multi-week lows that it had set back in June. It has been trending lower for the past month. Lower move lows, lower move highs. Just is what it is. It's a grind. Is it going to break out to the upside? Well, you know, it wouldn't take much of a move to do that, but right now we just don't have any confirmation for that. Just by attrition, this could be set for a sideways to higher trade, but right now we have to look at it as it's a bear. That just is what it is. So let's go back to the Euro US dollar. Let's see. We have a question here. Do you think the pound US dollar will be a bull because it broke to downside since November of 19? So let's go back to this. We have a question here on our chat room here. All right, so we have the British pound US dollar. Okay, so the question is, once again, will it be a bull because it broke the downside since November of 19? Okay, so let me show you what everyone else that's viewing here, what the question is and what they're talking about. So if you see here, we have this trend line here, right there. Okay, let me get this a little cleaner right here. There we go. Okay, now let's get it back to the daily. Let's see where that comes in. Okay, so we have a multi-month breakout to the upside. So the question is the down since we've broken the downtrend. Well, we have broken the downtrend on a daily basis, but only slightly. So what we want to do is see how much confirmation we get, like just by attrition from where this market was trading is looking to go higher. But here's the one thing that we have going on for the British pound US dollar is we set this low back in March, okay? And if you look at, the slope of this market, we've been sideways for months, but just on a bullish basis, it's a pretty even slope, meaning that we could continue to maintain this trend, wedging higher before we have a breakout. Right now, with dollar weakness, basically prevalent across the globe, I think that this is one of the reasons why we're having this dollar strength or dollar weakness versus the pound. Now remember, trend is your friend. So we've made, consecutively major, here's a high, here's our higher move low. We made a higher move high back in June. We made a higher move low back at the end of June. And now in the midst of trying to bounce off of this low, so this would be your key low. So unless we would have a failure over here of $1.2262, I think that you're going to maintain this neutral to bullish posture. Now the question is, how high can we go? So you want to know, like, where would we get if we truly are breaking this downtrend? Where is our projected potential? So let's take a look at what's going on here. If we want to see where our projected potential is, let's just see what we've done so far. So from this major high, which is where we set this trend, the downtrend, and this low that we had set back in March, let's just look at where the fibs lie. So if we look at this $28.23, which is where we have a consolidation thing, let's put it right here. So that puts us right at the 0.618 retracement here as far as like buffering off of this low. So does that mean that we can't go higher? Well, absolutely not. We've been obviously wedging on a multi-week basis, and now we're breaking out to the upside this week. So this is critical. So I think that the biggest thing is that higher move highs and higher move lows are indicative of what? An uptrend. So we really need a breakout of $1.2824 to confirm any true serious bullish momentum. The slope of this monthly trend is steeper obviously than it is on the daily and the week or daily chart, but it's not that severe. And now because we've been wedging here and coming by attrition, we were going to come through this wedge anyhow, and we just have to see where we settle and where we go. So I would say maintain a bullish posture for this market. It is today, obviously not as strong as the other currencies are versus the dollar, but you got to remember that the pound is a very big component of the US dollar index, and it has a much wider range than most other currencies. So when the pound seems like it's rather quiet, it's still bigger, moving more than it is than most of the other currencies, and it is one of the most liquid currencies as well. So that's something you have to take into account. Let's see if there's any other questions here. So we have, I think we've answered that one. So we have, obviously, we're looking for potential follow through here for higher move highs and higher move lows. As far as the height of where we can go, I think you have to get above that 1.19 to confirm a breakout, and then I think you'll be able to hit around this 130 to 32 area for any follow through as it continues to snake along this upward sloping line here. And I think this would be the one to pay attention to also. So let's make this a maroon line. We'll make it a little thicker. Okay, so you see this upward sloping support line here. As long as we're bobbling along this, I think we have a good chance to continue to make higher move highs, higher move lows, and pressure resistance. So let's see, any more questions? I think that is it. So let's see, any more questions? I think that is it. I will go back to the Euro US dollar real quick to see where it is at. As you can see, it's pretty much bobbling right around where it was when we started this webinar. Remember that now we're coming into the market closures for Europe. Asia's offline, and right now we are heading, well, we're not too far away from the lunchtime trade for the markets in the United States. So it's summertime. We've had a nice big, I'm not going to say it's not going to make higher move highs, move with the dollar already, and now it's probably going to, I'm not going to say it's not going to make higher move highs today, but it's probably running out of gas for the day, and we'll see what happens tomorrow, which most likely with this momentum looks like the dollar will get pounded once again. So the close today is going to be big. Just use caution as you if you don't try and be careful trying to fade this move. Just like you don't want to catch a falling knife, you don't want to jump in front of a skyrocket either. And right now this market has broken out to the upside, and you also got to think about it. The low yesterday was 114.27, and now we're at almost 1.6. We hit a high of 116.03 today. almost a $2 move from yesterday's low to today's high, when we've been basically having a range of, what is it, 1467, yeah, 50 to 60 pips a day maximum, and that's what basically the range has been. And now we've been trend moving. First time we've had a trend move since the end of May that went into the beginning of June. After that, we've been sideways for a month and a half. Now we have momentum to the upside. Use caution, take that into account, and always remember to like, follow, and share our videos to the rest of your Forex friends and market friends. And while you're at it, if you're looking for some trades and trying to figure out how to incorporate some signals into your trading system, read the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle version. Through it, you can utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge against the markets. And subscribe to our YouTube channel, and you'll know when our next video is coming out. You guys have a great day.